Hello, YouTube. The stock market just had its worst day going back to October of this year, and we even see volume coming in. Almost everything is red, other than Google, which managed to go green. I'm not exactly sure how. So, we want to remind ourselves of Warren Buffett's quote, which is the stock market is a wonderfully efficient mechanism for transferring wealth from the inpatient to the patient. Let me remind you exactly what that means. I'll show you here really fast. And then please make sure you stay tuned till the end because there's going to be a lot of information we're going to go through to make you ready. We have a bearish engulfing daily candle. That's bearish. Why? Hey, we took out yesterday's high and yesterday's low, and we're currently at the low. We talked about 474 being resistance. Well, that's pretty much where we opened. We opened 4 cents lower. We pushed up to almost 476, and then we sold off. And now we're right here on the uptrend. But this feels scary, right? We're right on the uptrend, but it feels really scary. On the uptrend, on the uptrend. Is this time going to be different? Hey, we'll definitely find out. But now, as we look forward here to our weekly chart, this is what I want you to pay attention to. It's Warren Buffett's quote, to have the patience to let the pattern actually break. What's that pattern? Let's remind you. Let's go to full candles, make it nice and easy to see. It's the higher lows. So now we have a failed breakout, which means we failed to hold the progress that we made today. We went up, failed to hold it, and then we went down. We're now back below last week's high. But this higher low and higher high pattern has not broken. It's intact. And this is really important because, as we noted, Bitcoin gave us a warning here where it was an inside bar, lower high, higher low, but we came down right to the previous weekly support, and then we got a bounce. Bitcoin's up by about 6% on the week. So remember, we need to have the patience to let this pattern play out. And to be honest, there's no real reason for the market selling off today. Everything is red. But let's zoom out and see whether or not, there's Mr. Green. So even with the red team coming in today, the market is still doing pretty good in the last week. It's very important to also note that this is a really good time for us to identify some strong stocks and some weak stocks. So this is where I was looking to things like VIX. VIX is up 9% today. This thing is unusually strong. The dollar is up today, but yields are actually down. And remember, yields go down when stocks go up. So this is very unusual. If we look here to some other indicators, it's going to tell us a bit of a story. So normally we would see DXY, VIX, and the 10-year note all up. Not today. So what this looks like is it looks like it's stock selling specifically. Otherwise, this should be higher, closer to 4%. It's not. So that's a really big clue for me. And then in terms of unusual strength, this is where even though Google is giving us a shooting star, it's still green on the day, and it's actually over resistance. Why is that important? Because not a lot of stocks closed green today. So Google is showing unusual strength. It is strong. In terms of weak stocks, let's find one here. Here we go. Tesla. Tesla looks weak, and it's right on support. So it went down by 4% today. It's slamming right back down to that key test with the downtrend and the uptrend we talked about. So today, that's really what I want to prepare you for. I'll show you one more quick chart. And just before they do that, as always, I'm going to ask you for a huge, huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. I do publish stock market videos every single day, and I will be live tomorrow with you at 9:15 Eastern and walk you through that market open. We've been talking, let's go back to QQQ here. So remember on the stream yesterday at the open where we were talking about how if we're not able to hold this angle of ascent, again, an acute angle, which is this one right here, what's likely going to happen? Well, we're likely going to come back down to support. So because tech is the number one leader right now, I want you to pay really close attention to a really strong support area here. We're going to go through the daily, weekly, and monthly chart. And as a quick preview, we kind of told you this, right? So we talked about this. I shared this 2 days ago, I believe, 1 or 2 days ago. When did I share this? Can't remember. 1 day ago, 2 days ago, probably about 48 hours ago, where I said, friendly reminder, that we are now in extreme greed, and it would be a great time to manage the risk, setting stops, raising stops, and trimming. So I'm going to talk a little bit about that today, but I really want to talk about where we could go from here. We pushed as high as about 80 intraday, and now we're back down here into greed. So we went into extreme greed. Now we're falling back down. We're forming a lower high, and we're forming a lower low on the chart. I also showed you this quote here from Mark Minervini, specifically talking about how a lockout period is bullish, but we have to be mindful to what exactly is happening here. So I'm going to go through and update you on this as well. All right, let's go through QQQ. So after we said that it was unlikely that we were going to be at 416 on Friday to maintain this uptrend, which means we keep bouncing. Well, now we lost it. So I gave you a warning for sure. We got a bearish engulfing candle here too, and we're likely going to get follow through selling because we closed at the low of the candle. What's missing here is volume. We don't see the rush or the exodus like we do on SPY. So we talked about how if we can't hold our current angle of ascent, which is this line pointing up, we're likely going to fall back down to our lower trend line. That would be about right here. Right here means roughly 394. That would also be right around our previous tops. What does that mean? If resistance turns into support, we should be able to leg up and continue the march to infinity and beyond. If we look here to our weekly chart, pretty similar, but I want to actually zoom out one more time to our monthly chart, because if we look here really closely, we've been talking about this chart a lot. Hopefully you remember it. As long as we're over that previous candle high, this looks really bullish. So we have 394.14 as the November high. What does that mean? It means if we crash hard all the way down here to about 394 point something, that's going to be our uptrend. That's going to be our previous resistance, which should turn into support. And it's going to also be our previous monthly top. I would expect to at least find some buyers there. Is it going to be a lot? That's where we find out the strength. Right? We find out how much these buyers want it. If you look here to a short-term candlestick too, as soon as we lost 474, right? Start sliding. Remember the pattern we talked about? We can go up, we can go sideways, or we can go down. Well, pretty obvious to tell when we started going down, there's a bearish engulfing 15-minute chart, close below the low. We failed to make a higher high until we get to here, dead cat bounce, and then we just fade. So the same pattern can play out here on the daily chart. I want to show you one more thing because I just want to be aware that we could potentially be starting a fade here. If we look here, we have one full candle, and I know this might be a little bit harder for you to see, so just bear with me. There's a reason why I like to use hollow candles. It signifies whether we're closing higher or lower than we open. So here we have one red candle. Over here we got three red, but there's only one full. Okay. Now we go back to here, one red, that's it. The last time we actually had back-to-back red full candles goes all the way back to our October dump. Here we were going up. There's a little bit of a drop. That's the start of the move lower. There's your M or more downside. So if we form yet another full red candle tomorrow, the probability is that we're going to start slamming down. Maybe 460, maybe 455, maybe back down to strong support. That would also be our monthly high. We're looking at, that's at 458.32. So 458.32 is going to be a little bit higher. And that's an area we should also look for, like we looked at on QQQ. The volume is picking up here. And that's a little bit of a warning. I'll show you one more thing that we also talked about on the pre-market stream. Maybe another reason, I'll give you a shameless plug here, to subscribe to the channel. You can see our videos every single day. So I wasn't sure what was actually happening in China, but it gapped down 4% and it's down 5.3% now. So at the open, I'm like, well, this doesn't look good. This doesn't feel right. This feels like there's a sell-off happening around the world. We look to emerging markets, same thing. Gap down, gapping crap, right? Gapped down and went even lower. Down by 3.6% on the day. That's a big decline for an ETF. So what this all means is that we kind of knew we were overdue for a short-term corrective wave, but like Warren Buffett said, we have to give this chart patience to see if it's actually going to play out. The weekly chart is intact. There are no lower lows. And for the monthly, there are no lower lows. We still have our template to go to 5,000 or 500 SPY and beyond. But we have to make sure we pay attention to the rest of the week and the rest of the month. I'll leave you with the last little bit here that what I think is going to be really important is that if today you got a little bit stressed out, ask yourself whether or not you want to be thinking about this on Christmas Day and over your holiday break. Why? This is the market maker's job. It's to shake the tree, and it's to see where they're able to shake you out. If they shake you out, hey, they get paid. Of course they're going to do it. So ask yourself whether or not you could have, in hindsight, done something better, or maybe do a little bit of a postmortem, because it didn't really matter where you were today. There was almost nowhere to hide. But I'll give you a cheat code. My number one stock that I like right now, you can come trade with me. It actually saved my portfolio today. I closed down very marginally. What does that mean? I had a pretty good day today. If you want to see exactly what that stock is, you can join us at theelgo.com while we have our last sale of the year run, our December sale. So we knew we were overdue. Now the question for me is going to be whether we actually fall back down closer to neutral or if we bounce back up into extreme greed. Extreme greed is what we want. Now let's read this quote from Mark Minervini, a true market wizard. Yesterday, markets rallied strongly across the board following lower than expected CPI data. Is this the one I was looking for? No. Let me actually find the correct one here. So, because he had one from yesterday. I think this is the one I was looking at for yesterday. Here we go. And I'm not going to try to steal from him. Why? Because he's smarter than me. A lockout rally A lockout rally like we've experienced is a sign of strength. People might not believe that, though. I just told you we're on support while he's saying there's strength. But as the market extends and individual stocks get extended, I generally use the strength for selling into and nailing down swing trades. I exited I think 3 more positions today. This is natural. This is a natural part of the maturation of a cycle, a natural part of how we trade. We've de-risked and blah, blah, blah. I'm looking for a short-term corrective wave. Short-term pullback is overdue. So everyone who knows what they're talking about kind of looks for the same thing. I'll show you exactly what I was looking for today. I was looking for that failed weekly breakout. So I'll go here. I'll go to a horizontal line, and I'll snap a magnet on last week's high. Now we're going to zoom in and see exactly what I mentioned before. So let's go to an hour to make the time frame a little bit easier. So the sell-off just started, right? It just started. Volume definitely came in, but we have a lower low, lower high, close below the low. Then we get a massive slam back below where? Last week's high. That caused a failed breakout. That is exactly and strategically where I would be shorting it. What would I be doing? I'll tell you. I would be zooming into a 15-minute chart or a 1-hour chart and trying to short the lower highs as we're going down. That would have been like about right here and then also right here. The market barely bounced, right? Dead cat bounce and then just keeps fading. If you get confused by candlesticks, just look at the line chart. It doesn't really look like it bounced, right? Micro bounce and then just lower. So the fact that now we're picking up momentum on a short time frame, like a 15-minute, 1 hour, or maybe even 1-day chart, just means that people are looking for this. I am starting to get interested in shorting the major indices for a trade, right? For a trade, not a swing trade. Put volume is starting to show heavy complacency. Long-term readings is bullish. Short-term pullback is overdue. Whoa. So there you go. I'm not trying to say like I'm a wizard or I'm as good as Mark Minervini. I'm just trying to say that there are definitely different ways you can use your strategy to try to gain an edge. And if you don't have an edge, it is perfectly okay to sit on the sidelines and wait for the next great opportunity. There's always going to be one. The market ebbs and flows. It goes up, it goes down, it goes up, it goes down, but it has cycles over and over because human emotions never get old. All right. So with that said, if you want to come join me, Justin from YouTube, you can watch, you can take advantage of our last sale of the year. Otherwise, I have my weekend video queued up over here where I walked you through my game plan coming into this week. And if not, you can subscribe on the right-hand side to hang out with me tomorrow through the market open. If not, thank you so much for tuning in. I will see you tomorrow.